The war in Iran is giving the market pause, but home values are holding steady. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, March 20th. We know that buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. Starting off, we like to look at how the market performed over the past week. There are now 60 active homes on the market, 2 more than last week, which is a slower increase than we've had in the past couple of weeks, and that average asking price is roughly the same, just under 1.9. 8 homes went pending, 2 more than we had last week, which is a good sign, and the average pending price or asking price for pending homes is down, but still close to that $2 million mark at $1,931,000, down from $2,304,000 last week. And 6 homes closed this week, 1 less than last week's 7, with the average closing price dropping pretty dramatically down to 1.69, down from the 1.913 we had last week. So now that we know how the market performed this past week, let's look at the broader market indicators that help us know where the market might be heading. But before we do that, if you find this information helpful, why don't you hit the subscribe button down below, so that way you can know how the market is continuing to update or impact your options. And while you're there, why not share it with a friend? Everyone deserves to be in the know about their local market. Okay. Let's look at those indicators. The inventory levels continued to climb like I talked about, although they did so at a slower rate than the past few weeks. It had been increasing by 5 to 10 homes every week for the past month. That shows the fact that it only went up by 2 compared to last week shows that the ratio of new listings compared to new pending homes this week is much improved, which should translate to an improved turnover rate. And it has, although not by a significant amount. The turnover rate is up to 45% this week. It's still well below that 100% mark that we like to see, but it is creeping back towards being over 50%. Any improvement is a welcome sign after several weeks of the turnover rate dropping off. And speaking of positive movement, the over-under number returned to the over range again after dropping into the under last week. It didn't move significantly, but it is back to that over territory, like I said. So to me, this reinforces the idea that a well-priced and prepared home will still get good attention from buyers, even with the turnover rate down as low as it is. And in more positive lagging indicator news, the average sales price increased some more this week also. It didn't move up significantly, but it does look that the average will continue to climb back to around 1.9 up into this range, based on the average pendings that we've seen over the past few weeks. With the war in Iran continuing, it's no surprise to see the stock market take a step back. That includes the Triple Q Fund, which we use to help gauge the health of the tech industry. We focus on the tech industry because that drives a large portion of our buyer pool's employment. When the tech companies are growing and more buyers, that means more buyers are excited about making that big decision of buying a house. Unfortunately, the fear that is being caused by the war is also spiking interest rates. With the cost of oil likely to continue to increase, it's unlikely to see interest rates come back down, as we had another 11 basis point bump this week, back up to 6.22%. The thing that would reverse this increase in interest rates would be a swift end to this conflict. So hopefully we can see that, but we'll have to wait and find out. The big indicators this week are mostly reacting to the war in Iran. With that uncertainty, I don't expect to see any significant movement in the QQQ or interest rates that will help strengthen buyers' affordability or desire to make a big purchase. On the other hand, the lagging indicators are still showing that homes that are priced well and present beautifully are getting good buyer interest. And anecdotally, we have been seeing more multiple offer situations with our clients and with the other agents that we speak with throughout the Tri-Valley. That speaks to the strength and high desirability of our little pocket of the Bay Area here, and that will continue to help our home values to maintain despite the current geopolitical climate. Thank you for joining me on for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate this stressful and confusing process of buying or selling a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Thanks again for joining me. Have a safe weekend, and we'll see you next week with a new update.